So, before I give it to our great host and our guest, I just want to briefly introduce DueDash, who we are, what brings us here, and then, of course, we will talk about our session today. What is DueDash and why we're here in the first place? Now, DueDash is a platform that was created to solve one of the biggest problems in venture capital. The fact that most startups are not investable and don't raise funding, often because the data is missing, there's problems here. And if you as a startup are not able to get the funding you need, you might not survive the next year, which is often happening, especially in these difficult times, what we're going to talk about today, raising funding and economic crisis. How do you become investable in the first place? How do you convince investors? How do you build these relationships? And also make sure that the investors have a simple time finding you, engaging you, so that both sides are happy and we come to a good conclusion. If you're not part of DueDash yet, you can join tonight, already try the platform. And I will come back in a second also for those of you who need support at the end of this very quick presentation. Beyond our platform, we also support you with education. So if you actually want to know how to build an investable business in the first place, how to answer difficult investor curveball questions, what investors want to hear from you, we can help you with our Dashed Investability course. Just check our education site on education.duedash.com. We're not doing this alone. We're supported by a lot of incredible and amazing partners who support DueDash and our vision to creating investable businesses and bringing them forward to solve the problems of today and tomorrow. And coming back to what I said in the beginning, I said I will keep it short. If you are a startup, you want to get your fundraising support this year, get introductions to the right investors, or you're an investor today here in the session looking for a relevant, interesting deal flow, happy to support you. I will send a very quick survey. We basically just need your email, and you have to let us know if you're a startup or investor, into the chat just right after I'm finished here. And then we will reach out to you and offer that support. Now, with that, that's enough from my side. So when I give it to our guests and our hosts, let me just put you in front so that everybody can see you well. 1 second. Also, Jose, yeah, so Rule, whenever you're ready.
Thank you, Michael, for that insightful intro. And thank you, everybody, for joining today. Good morning, good afternoon, good evening to all of you. I'm the founder and CEO of DueDash. As a serial entrepreneur, I've built multi-million-dollar companies and invested privately in many companies for more than 15 years. I have experience in M&A and basically the whole shebang. And that's why I'm really excited here to welcome our guest, José Luis Silva, who is a co-founder of Dux Capital, passionate about growth, finance, startups, and golf. His main responsibilities include overseeing investor relations, portfolio management, other than being part of the investment team, as well as creating a startup funnel. He has a wide variety of experience, right from M&A, debt equity, capital markets, structured finance, as well as treasury in Latam, and has worked as an investment banker previously in HSBC. He is an MBA from IE in Madrid and specializes in PE and VC, and also holds a BA in finance. So thank you so much for joining me today here, Jose. I guess being in Austin, it's really hard to escape the startup ecosystem. And I know recently you were raising funds. So when did you realize you wanted to invest in startups, and how does your background assist you or influence you in your current venture? Perhaps you could summarize your investment thesis as well for us in few words.
Sure. And before that, thank you very much for the invitation, Parul. I met you like 6 months ago, and I'm very impressed on what you've done. Thank you to DueDash and all the team to inviting me and to start sending pipeline since day one. And I think you're doing the right thing for entrepreneurs and for investors. And I can start by saying that the entrepreneurs are the rock stars here, not the investor, not the LP, but the startups, the founders. So thank you very much for everyone for taking this time to hear a bit of our story. And I could start by saying, how did I start? When I went to my MBA, I didn't know much about entrepreneurship, and I got in love with that. At IE Business School in Madrid, which has a very great ecosystem. That was the first aha moment that I had with entrepreneurship. And I decided to study private equity in order to combine my past experience. I used to be an investment banker for 10 years for HSBC, doing M&A and capital markets. And the best way to combine this new passion of entrepreneurship with my past experience was to create a fund. I went to Singapore to study private equity. I realized that I didn't know anything because it's very different to study than to structuring and executing a fund. So coming back to Mexico in 2015, everything started over there. So in general, our thesis is that we invest in early stages, meaning pre-seed, seed, late seed, and Series A rounds. We're an international investor. We have always been an institutional venture capital fund. Now we are in our second fund, and we will invest in 20 startups of $1 million average tickets, and we do it to Latin founders. That has been a very good thing and a limited thing as well, because a lot of our pipeline that comes from Europe, from all around the world, unfortunately, if the founder is not Latin, we cannot invest, but we always help because I think we're a catalyst. We receive hundreds of startups per month, and that's more or less our story. We lead all our rounds. We're a very active but non-invasive investor, and we participate all around the world in terms of VC and entrepreneurship. We've been in business 8 years, and now in Fund 2, that it's 100% institutional US venture capital fund. We're trying to commit our small piece to make this industry larger and this industry more fundamental. I've always been a fundamentalist, not a FOMO investor, but a fundamentalist investor, and we will continue doing so. So yeah, that's probably a little intro on what we do.
Awesome. Thank you so much for sharing that, Jose. So great segue to my question here. So capital efficiency across geography, and it is really important for shaping VC returns. European startups do much more with less capital than US companies, and 50% of American startup founders are immigrants. So how do you see this with the South American companies, and how do you think they get handed over from, let's say, South America to US? Because a lot of European companies after Series A, they look towards US for capital and growth. In your investment thesis, since you invest both in US and South America, how does that play out? Obviously, US has, after all, 350 million people and one regulation. So can you just shed some light on that?
Yeah, sure. I mean, we have to understand, and I live in Austin for the past 10 months, but I've always been tied to the US all my life. So the efficiency of this market, it's humongous. That's why I decided to move my second fund to the US. Today, we have been invested by amazing LPs, including Bank of America as our anchor investor for Fund 2, and I lived it myself. So coming here to this opportunity land, it is great because the amount of capital being 350 million people in Latin America, we're 600 million, so it's a great market. But the efficiency of this market, it's amazing. We have to understand that all the story about venture capital in the US started more than 50 years ago. And in some other places, like in Latin America, like in Mexico, for example, it started no more than 15 years ago. So this has been a normalized industry in the day-to-day of any American. And I think that makes it a great country to invest. So having said this, when you come as an immigrant to the US, I think you become very, very resilient because you want to be better. You want to get a chunk of this market. And I believe that you work very, very, very hard in order to achieve that, because entering this system is difficult, not only in a personal matter, but also in a professional matter. So I believe that immigrants here in the US would push and would give a little bit harder efforts to achieve what they want to achieve entering this community and this market. I am very impressed by the European market in which I studied and which I have lived also a couple of years in Spain specifically, but my best trip of my life has always been Europe. I have family living in Europe all the time. So what I really like about the European system, it's the efficiency of the institutional investors, specifically in the through governments, which these institutions are very, very, very efficient towards entrepreneurs. So I really think that it is a model that a lot of other countries want to replicate. The German one, for example, it is an amazing structure for the government. I have seen all my life the government investing in startups and in companies in general very efficiently, and I think that's a very important variable and aspect of the European market. So when you combine the European market with a great efficiency in the institutions with the Americas, I think there are very, very good opportunities. Unfortunately, investors have to focus on what they're good at. So sometimes for American investors, it's difficult to invest outside in Europe, because to control that investment and to be a knowledgeable local investor in Europe, it takes a lot of effort and a lot of knowledge to do so. We are generalists in terms of industry, but I've always and I are focused on Latin founders. But I think that you have to go step by step, and it's been difficult for investors in this different part of the globe to invest. That doesn't mean that the largest investors in the world see Europe as a great place to invest. So those are some of my ideas on our markets.
So can you share a little bit about your process? How do you go about evaluating a startup, and especially which are just at the point of scaling the business, since you invest in so many different types of industries, and perhaps also share some of the business models that you'll never invest in? And what kind of evidence do you look for in a company, and how do you evaluate those parameters when the data is applied to you?
Right. So 8 years ago, when Daniel and I started a fund, we had to go to the streets and greet startups and try to build a network and find pipeline. And it was just amazing. I love the selling side of VC. I love fundraising. I think that's a typical. A lot of people hate fundraising, but I like it because I'm a very human investor. For me, the variable number one is a team, and we will talk about that further in time. But time passed, and today our pipeline is organic. So receiving more than 20 startups per week, we needed to structure technology in order to help our pipeline. So our funnel, whenever a startup comes to our funnel, to our pipeline, the first filter, it's decision tree technology that the entrepreneur will fill out a small survey through the internet, and our technology will decide whether that startup fits or doesn't fit our thesis. Once that happens, then human interaction starts. So our 6 to 10 analysts go into this pipeline, and they ask for a first pitch, a typical 30-minute pitch in which the founder will share their story. And from there, we start our analytical process. As I said, we have always been fundamentalists. Mm-hmm. So we do carry out an important due diligence process. We use Inteligo, which is a very strong technology for due diligence, in which we analyze a lot of variables, personal aspects of the founders, professional background of the founders, the product, the market, the collaborators, all this process, which is very institutional. We try to make it very formal. We interview 3 clients, 3 suppliers, 3 collaborators, 3 past employees, if that's the case. 3 investors. So that way we can get a sense, a 360-degree sense on the founder and on the teams around the startup. And once we do that, we bring in more than 25 advisors to our investment committees, in which the startups will pitch in a live session, kind of like Shark Tank, but formally and institutionally. And from there, we send our term sheets, and we finalize the due diligence. If that due diligence is approved and it's positive, then we start the structuring of the investment. In an average, from pitch 1 to invest, we do 1.5 months. We need to be agile and fast, because the startup and the founder, they lack, or we lack, of time and money. So we have to be fast on deploying capital. If not, you lose momentum. So that's our process in general. I would love to share our initial type form, initial survey to apply to the fund, and go along in time for that. In terms
Awesome.
in terms of a case study or typical examples of teams and startups, we like to check 4 variables that are very important. Team, in which we see past experience, as we have discussed, in which we like to invest in founders that are 100% dedicated to the startup, and not, of course, not a side business. We like to see diverse teams. We are a diverse fund manager, so we like to see diversity in our investments, either if it's from different nationalities, from different ethnic groups, from different genders, etc. We like to see that diversity. We like to invest in minorities, so we like to go with entrepreneur even to their house. I've been to the house of the entrepreneurs, of the founders, to meet them there and meet them in a personal aspect. And once that those teams are checked out, we start seeing product market fit, product in general. If that product fits a large enough market, if it attends a market, if there's clients and potential users that would like to buy that product. And talking about the market, that's very important, because you can have an amazing product, but if no one will buy it, then you can lose momentum around that. And within the product, there's a lot of aspects: technology, intellectual property, a lot of marketing around that. The go-to-market strategy is very important to us, because you can have a good team, a good product, and a market, but if you don't know how to tap that market, then it's not sufficient to go ahead. And the past experience as well. We do like to invest in second or third time entrepreneurs, but I think it's not sufficient enough to say that if I was successful in the past startup, I will be successful in this one. But it helps, of course. You learn a lot from past experiences, and we also like to see that in our portfolio companies.
Awesome. So this kind of ties to the DueDash 5T model, because we assess the startups, our tech assesses them on the 5 core dimension, which is team, timing, traction, technology, which you already covered the dimensions, so we take them, and TAM, which is the overall market. So of course, looking at that, and you shared pretty much in detail all the parameters that are needed. What are some of the key team characteristics that you look for? You mentioned about the network, you mentioned about their capability, but how do you assess those characteristics, even if it is a second time or a third time entrepreneur? So what kind of evidence is, let's say, most significant, or what could be potentially, let's say, the red flags, and what factors are likely to contribute to a founder's success, even if it is an early founder? And not a second or a third time. Yeah. So what would be an ideal team profile, so to speak?
I would say the opposite. So what we like to hear is the failures. So because everyone can talk great about what they do, right? It's easy to say your positives, but it's not that easy to say your negatives. So we really like to go into the past experience, in the learning curves that the entrepreneur had, in the failures that they had. We want to talk to the people that failed and the people that made them failed as well, in order to see how the learning was. So that is a major variable, I think, to analyze, because probably all of you have lived any failure in your lives, and it's when you become and you make yourselves resilient. And that's I think the number one variable that we like to see. If it's a first-time entrepreneur, we like to see the past experience in terms of academia, in terms of past jobs. If that person was in the corporate world, we like to see what they did there and the case studies that they had and the day-to-day that they had. If they had teams before this startup, we like to speak out with past collaborators of the other startups, past investors. So these variables will tell you a lot, especially the collaborators that were laid off, if that's the case. That's a very, very, very interesting insights from them, because I think if that person was laid off or terminated with a startup that failed, they will give you very interesting insights about the founders, about the product, about the teams. So that we do that. That's why we do all these interviews with different stakeholders of the startup, and we do it in the past. We like to speak to previous investors. If they written off that investment, we want to know how that experience was. And I think that's it in general. We like to see also the preparation of that person in terms of academia, as I said, because it helps. Knowledge drives success as well, or at least a little bit, and not necessarily 100%, but it will drive. And we like to see those different variables within. And another one that it's very important to me, because I lived it myself. My first fund was the most difficult thing I've ever done in my life. 2017 for me, which was my third year of the fund, my second year of the fund, in which I had not zero money. I have minus $500,000 in my pocket, because the investors, you have to have a skin in the game. So I had like 15 credit cards, paying for my day-to-day, paying for my piece of investments, having a really hard time with money and with time. And personally, I like to see that in startups, how difficult it was for you to start this business, and how did you feel in the worst time, in the valley of death. I always like to analyze founders in that valley of death, because when I was in that valley of death, it was amazing to recover from it and to learn from it. And I think that's when the real variables and the real strengths of an entrepreneur arise in their persona. So yeah, I like to see that.
So maybe you should expand a little bit on that, because I think founders, all of us are founders, whether we are investors or not. I mean, we are founders in our own stride. How do you overcome that valley of death, or when you feel this is the day I'm going to, just give it up, or whatever, the day you're feeling like that, how do you motivate yourself? How do you pick up that day and pick up yourself and just face the day? What would be your maybe couple of insights that you could share with our audience today?
I'm a strange animal, because my wife tells me that I'm insane, because all this risk when you have nothing and when you need to pay your bills and you don't have a dime for it. And it has happened to me many times in my life, a lot of times in my life, with my kids, when I was by myself, etc. For me, it's like fuel to my life. I don't know why, but having this stress, for me, I don't have to say I enjoy it, but it fuels my life. So I see a lot of that in entrepreneurs. And I just saw a comment on someone saying that that was the story of their life. So and that's being an entrepreneur. So this roller coaster, when you're in the goods and the bads, I think that the bads are more important to drive that success, as I said, and it's very important to see that person with their families, with their partners, with their teams. How will they cope on these issues when they don't have anything? And when you have everything, or you're in the high side, how do you react? For example, I remember one of my first deals in Fund 1 that we rejected. Fortunately, this person raised a lot of money in Mexico, and at 1 week after it, people found him with a Ferrari in the streets. So how do you work your life when you have the money and when you are in the top? So yeah, it's good to see both sides of the valleys.
Yeah, awesome. So I mean, we are now in 2023, 2022. For numbers, global venture funding fell by 35% year over year. And while startups raised a record high of nearly 638 billion in 2021, they drew only 415 billion in 2022. So I was just wondering, was it all a bubble? How do you make sense of this current market?
Right. And I was talking about that with an LP yesterday. And I am a very bullish person, a very positive person. I always try to see the positive side of the negative aspects. So I think it's a correction. A lot of capital was in the line. A lot of investors only invested to allocate money, and that was an error. That's why being a fundamentalist is, I think it's a conservative and the right way to do it, because you have to analyze where you allocate your money. And I'm not gonna give the name, but I'm gonna talk about a good friend of mine from one of the largest funds in the world. He's partner of that fund. And in 2021, he told me, José Luis, when we started the fund, which is a many $billion fund worldwide, we started investing like this. And I said, oh my God, all right, that's great. The spray and pray, how they say it in the streets. So it was great. We allocated money. We started getting write-offs and hits on our portfolio. So 2020, at the end of 2021, we had to take our hand off, and we started investing like that. And in 2022, with all this crisis, we had to take the gun out, bring a pencil, and start analyzing our investments. So what I'm saying is that this correction was necessary for the market, because a lot of capital, we have seen it in the past news last year, in the 2 quarters, of very, very, very disappointing stories about money flowing into hands of people that was just exacerbated, was not making sense. And I think this correction was necessary for the investors, specifically for the allocators that have the largest pockets of capital in their hands. So valuations were exacerbated, and I say it as an ex-investment banker. And as I am very positive, today is the day to invest for me, because valuations have corrected 40% on average in my pipeline. So today, venture capital is counter-cyclical. So when there's an economic downturn, it's more difficult to raise money as a fund manager, but it is a time to invest because valuations go down. And when the cycle reverses, that's when you will have your exit. So the vintage year of 2023 and 2022 will be a very good vintage year for the allocators that invested, because we are invested in a more fundamentalist way, in which variables for these valuations make more sense than 1 year ago that they were just blowing off.
So, I mean, it's a great point that you make here. So when analyzing these deals, whether it's early stage or late stage, so how much do you rely on data compared to your personal evaluation of the team and the business overall, and especially with the valuation? So, I mean, as an early stage investor, I'm sure you try to be the first institutional check and you try to have a corrected valuation of a startup. So from your standpoint, how much of that would be an impactful thing for you fundamentally from your fund standpoint for Dux Capital?
Yeah, it's very difficult. So I always say that when you evaluate public companies, you take again a little pencil and you start drawing. It's an art, right? You have variables, but you do the art. When you want to evaluate a startup, in Mexico, I don't know if you know the piñatas. So the piñatas, when you're a kid, they put you a rubber in your eyes, and they give you like 10 rounds in your same rotation point, and then you try to hit the piñata, right? So that's the way you evaluate startups. Unfortunately, all the variables, you don't have them, and the data, you don't have it. Mm-hmm. It's very difficult to price a startup by doing so. So I really rely on the subjective side of the evaluations. Today, more than ever, the soft skills of entrepreneurs have been incorporated in valuations, specifically in Kaufman Fellows. In Kaufman, I don't know if you have heard of that institution, but they came out with a very, very interesting way of evaluating startups without numbers, only mm-hmm. with specific variables, and I can share that link as well. We include that into our valuation models. So that's why I think I love venture capital. I think it's a lot of art combined with data and knowledge, but there's some good piece of art around what we do. So it has to make sense. So rather than just putting a number into a startup, it has to make sense. If I invest $1 million on average, my take rate is around 10% in my portfolio. So there you have an intrinsic valuation for startups. And when you receive a valuation that they're raising $4 million and they're selling 0.04% of the company, and it has happened to me, then you know things are not gonna be right. So it is a very good sense to evaluate the companies to make the round make sense. So you have to dilute every round between 10 and 20%. If you fall under that or above that, try to put yourself into that, see previous rounds. Of course, there's a lot of outliers here in this call, I bet so. And I believe there's a lot of startups that will raise $10 million for 1% of the company. I don't have a doubt on that. But the normality in the market is to have a natural dilution on that. A rule of thumb is to get to, after a Series A, you can lose control. You can go under 51% of your company as a founder. So I see valuations like that, not by a financial model, which we have to, of course, but it's very difficult on early stage companies to set a price on that. Mr. Damodaran in NYU Stern, he's one of our pillars. Daniel, my partner, had an executive program with him. So he has a very nice paper called How to Evaluate Early Stage Startups. So that could be a good paper to read in order to assess your valuation and this fundamentalist way of and subjective way of setting a price in your company.
Actually, I have his book and I follow him very, very closely. So it's really nice to know that you kind of uncovered that thought. He's really amazing. Thank you.
Yeah, amazing.
So, that's awesome. So on DueDash, startup founders can create structured company profile and a secure data room starting from the one-pager pitch deck. And from there, if it is a good fit, they can build investor engagement. In addition, they can send their monthly and quarterly updates to investors right from the platform. And there is a complete investor relations ecosystem in one place. And investors can use the system for all their deal flow, due diligence, and portfolio management. So all of you who don't have a profile, just go and set up your profile. It's simply very simple to go and register, and you can basically get started right away. So after seeing perhaps almost at some point in time, it was perhaps 2 unicorns in 2020, what do you expect to happen in the market because of the recent tech layoffs? And we've also heard that ex-Googlers and ex-Amazon people have founded companies, and like there's a list that goes on. So what is the sentiment amongst the investor community? Can you shed some light on that?
Sure. And I've seen some questions. Probably before finishing, I can write down the responses really fast. I'm going to share my link, and I'm going to share the correct name of Mr. Damodaran, Asworth Damodaran. So, all right, there's one point that I have not touched. A lot of investors, specifically the institutional investors, we consider ourselves institutional as well. No, we don't consider ourselves, we are an institutional investor. You cannot hold money for much more time. A lot of investors pulled back in June, on July, August last year. And the worst thing to do for the economy and the worst thing to do for your portfolio is to have idle money, because you don't get to the returns, you don't get to the timings, you don't get to the cash flow efficiencies. So I really believe that in second Q this year, a lot of allocators will have to deploy that capital that was pulled back last year. So I'm positive about that point. I've heard it directly from institutional LPs in the United States, pension funds, fund of funds, endowment funds that hold back a little bit, and they're planning to reallocate that money already, because you cannot hold that much. So the capital is there. It's not like in 2008 in the subprime crisis where capital was destroyed. Today, capital is there. There are high interest rates, of course. There are unemployment, of course, but the capital is there. Different than in 2008 that capital was destroyed. Today, I think, yes, we have a bad continuous of the pandemic, of course, but capital is there. So I expect that capital to be deployed this year, and I am positive about this point. And the global macroeconomic crisis, it's present, it's a fact, but we are too good to fail as humans. So fortunately and unfortunately, the financial markets have short-time minds, short-time memory, unfortunately and fortunately. So I'm very positive that numbers will be good again for 2023. I don't think as positive as the first half of 2022, which was an impressive first half, but I will think that the investment in startups in early stage will be positive this year.
Awesome. So now I'll ask you a few quick questions before I take the questions from the audience, and that you'll need to answer quickly with 1 or 2 sentences. Let me know when you're ready.
Ready.
So a great 1-minute intro that what elements should that contain when somebody talks to an investor like yourself?
Sure. So you have to understand that investors see hundreds of startups per week or per month. So try to be unique. Try to set your persona and your startup in the mind of that investor, because unfortunately, he or she will forget very quickly. So I have invested in startups that have been daily or weekly being on top of my mind. And that is a very important thing, because I think everyone is very intelligent and has great products. So the one that is on top of mind of the investor, I think has more opportunities to get invested, to have a good pitch, and to be on the top of that mind of that investor. That's like an additional point to what I have said.
Awesome. What are some of the latest trends and technologies that you're watching and you feel strongly about, especially with 2023 and the market to kind of pick up from there?
InsurTech for me, it's one that it's going to be very important for us. Fintech is still a great industry for us. We're good in general at B2B business models because of the networks we have globally. I like investing in consumer retail group as well. Back when I was an investment banker, I used to run the consumer retail group. So we have experience on that. We like e-commerce, last mile delivery, marketplaces, and in general, digital technologies. Web 3.0, I'm not that knowledgeable about. I'm not that experienced about it. I'm trying to still understand everything about it. Crypto and blockchain, we're definitely not good at it. We are not knowledgeable about it. So those are the ones that we have some experience, network, and passion about.
Awesome. What sectors or industries do you think will struggle?
Well, crypto, they speak for themselves. Blockchain, unfortunately, the past news have destroyed the industries. They are here to on the long term. I really think that blockchain and crypto will stay here and they move the world. That's a fact, and they will continue doing so. But with the right regulation and with the right mindset, I think that would be it. I'm not that bullish on the metaverse. I'm very human, as I said, so I like the human interaction, the physical human interaction. So that's me, that's personally. So, but I mean, you have to adapt, and I see my kids doing it, so you have to adapt. So those are some of the trends that I see. Fintech, I think it's still very, very, very important, specifically in emerging countries in which underbanked people. Mexico, 70% of the population is still underbanked. So it's massive opportunities in Latin America, fintech programs in the deposits and in the credit side as well, in both.
Share one craziest idea that was ever pitched to you.
So like 4 months or 5 months ago, I received a startup that I liked the idea, but it was apartments moved by helicopters themselves. So a combination of a helicopter and an apartment. So this person wants to achieve that you should live wherever you want. So your apartment should fly, and you should be able to move your apartment every day if you want. I really liked it, the idea. The only problem was that his valuation was $1 billion valuation. So when I told him, hey, and where are you at right now? Okay, 1 billion, what are you doing? What's your product? Where are you standing? What's your track record? I just started 1 month ago, and it's an idea. But if Adam Newman can do it, I can do it. Awesome. Adam Newman is the WeWork, as you know, the WeWork founder.
Yeah.
So that was for me was very crazy, because if he wouldn't told me, hey, all right, I'm looking for a $1 million valuation, $2 million valuation, I'm starting. Well, I should have seen more, but that destroyed my interest in that person.
Yeah, definitely stands out. Who is your childhood inspiration?
I would definitely say my dad, an entrepreneur, businessman, and an employee in his life. He lived 4 economic recessions that I lived with him, and he always gave us everything to become what we are, and including our mom. So that's my response.
Awesome. So what are you currently reading?
I'm reading Red Notice,
Okay.
Vladimir Putin's #1 enemy. It's been an amazing book. I started 2 days ago. I'm about to finish. Crazy story. So yeah, that's amazing. It was a fun hedge. It is a hedge fund manager that did financial strategies with shorting Russian public to private companies, and it's just fascinating.
Awesome. Definitely, I'm going to pick that one as well. What qualities do you value the most in professional relationship?
Honesty, definitely. I hate BS, so I really like people to be honest. If you're going to invest in my fund or I'm going to invest in your startup, for example, be honest. If it's a no, say it fast. If it's a yes, try to say it fast. So honesty for me in the personal aspect is the number one.
So those who are contemplating investing or who have just begun with this journey, what would you like to say to them?
It's a hell of a ride. I opened my eyes when I quit being an employee. And I really, really, really was a game changer in my life. It doesn't turn out to be positive to all of us. It's very, very complicated, but it is very, very, very satisfying. The bads and the goods are very satisfying. Any check that you receive when you're a collaborator, any bonus, will never be compared to your first client, to your first employee, to your first tax returns, to your first things when you run and you're the pirate of your boat. Absolutely.
Well said. If you were to give one piece of advice to young Jose, what would be that advice?
Don't be to quit HSBC in year 4 and not in year 10. So I would have loved being an entrepreneur in my 20s.
Okay.
I think that you have to come. Yeah, don't wait too long. I mean, it is great to go to the corporate world and have those bases together with your academia, and yet like try to get it, but try to go to the market and build your own company very, very young. It's better to do that and then get employed than the other way around, I think.
Sure. Thank you so
much. Because
you
can always go back to you can always go back to the corporate world.
Absolutely. So we're going to start with the audience questions because my eye is on the clock. So the name of the author of the book that you mentioned, so it was Ashwath Damodaran. If you do NYU, search for NYU, New York University, and search for valuations and ASHWATH, Ashwath, and Damodaran's a long name. So I'm sure you could, Google will help you there. There are a lot of YouTube videos as well. So before you kind of decide to buy the book, you can definitely go ahead and just watch his videos. They're awesome. They're amazing. A lot of value there already. So another question is, do you give feedback to startups you say no to? Because I think it's a genuine question, because a lot of times startups find it really hard in terms of why they're getting a no or they get filtered out. So is there a way to get good quality feedback?
Yeah, I go to how I started. The rock stars are the entrepreneurs, not the allocators. So we try to be very respectful on our process and our timings and our communication. Even though we receive these hundreds of startups, we try to go fast and respond fast to them. And the best way to do it is giving that honest feedback. It is the worst thing I hate about my business is to say no, because I get very personal. And my partners always tell me, please don't get personal, but I do get personal. So the worst part of my job is to say no to startups. But the best part to say no is to say why you said no. And we always do that. We always do that. And sometimes the responses are awful because humans, we don't like sometimes the real feedback or a lot of people. And sometimes I'm not correct, of course. A lot of times I'm not correct. But at least I give the feedback that I saw on that business model or that team or in that startup.
That's great. But what would be the other ways for startups to kind of seek feedback? Maybe join accelerator programs, maybe go for pitching sessions, try to meet investors and in events, or maybe just talk to friends or somebody who don't know about your company and just pitch to them and just see how that kind of resonates with them.
Yeah, the incubators and accelerators are a great way to get feedback on what you're doing. In the product side, always try to to make demos and prototypes with corporates or with your potential clients for free. That's the best honest feedback that you can receive. We always like to see beta testing, but real beta testing in clients. If it's a user or it's a corporate or it's a startup, whatever, that feedback is very important. That's why the MVP, it's very important when you are an entrepreneur. And if you go to an incubator or accelerator, I like the ones that are equity free. As a venture capital, I pay to play. I don't charge to play. That's why I sometimes don't like incubators and accelerators that charge to play, because me as an investor, I pay to play. I invest to be in the startup. Again, the entrepreneur is the startup, not the investor, not the incubator. So try to go, my piece of advice is try to go to incubators and accelerators that are equity free, or at least they are investing in your startup. And you can get good feedback.
Sure, I think it's a business model for each one of them. I mean, they need money to run as well. So I guess there is some logic behind each one of them. So, but
you want to charge the investor, not the startup. So the accelerators should get grants, should get the government, should get corporates to invest, and those are the ones that you will charge, not the entrepreneur. We entrepreneurs don't have money and don't have time.
Sure.
But I mean, that's my personal point of view, and are very successful accelerators and incubators that will charge some money, and that's fine. That's my personal take on that.
Absolutely. So there is a question from a very young fellow. What advice would you give to a young college student seeking to enter this industry in the future?
Go for an internship in a venture capital fund. The venture capital industry is one of the most sexy ones in the world, because you are three people. You're an investment banker, you're a consultant, and you're an entrepreneur, because you have to raise money, you have to invest capital, and you have to become part of the startup. So I love when students come to the fund and search for a free internship. So if you get to a fund and you don't care about money and you just go in, it's going to be easier if you don't have a salary, and you say, I want to be here no matter what. Give me 6 months of an internship for free. I want to learn in a VC fund. For me, that's the best, because if you go to banking, you have a good experience. If you go to consultancy, you got a good experience. If you want to build your own company, you have a good experience. And not only that, you already have one potential investor, which is the fund that you're working in.
Yeah, absolutely. Very well said, Jose, there. So the next question is, what are your views on digital identity and authentication space? I know there are a lot of solutions there, but where do you see could be, let's say, some unique proposition could be there, if you have some views on that, Jose?
Sure. I mean, I'm seeing it already in the US. I don't know in Europe. I went to Europe this summer, but I was impressed by the officer didn't ask me for my passport nor my visa. Everything was through face recognition and persona recognition. So seeing that in the country of the world that receives more immigrants and everyone wants to be here, it was impressive for me. So that's been changing, and that was great. Sometimes it's scary for people to be so automated, but I think that we are there. In the fintech side, we are getting there, but you should already pay with your eyes and with your iris recognition. You should pay like that today. I know in Europe that happens. I haven't seen it here, but fintech should see a lot of authentication to transact. So other than that, I'm not that experienced on that industry, but I've seen those.
Yeah, definitely cybersecurity is going to be the growing market. The more digital we become, the more security requirements will be there. So definitely that's a big space to watch. So there is a question that if you have any views on the Middle East market. So the person probably sees a lot of companies from EU and North America who are moving to Middle East. Do you have any views on that?
Unfortunately not, and I'm sorry about that. I studied there as well, but unfortunately I don't have that much contact. I would like to have more and more knowledge about that. So I'm more into this side of the globe. Sorry about that.
Sure. I think most of the businesses that I have seen, at least in that region, have been either they had some kind of a product. It was more for market expansion, capturing the market share, so to speak. So the fit probably was there, or the understanding of the founder or the founding team was there that they could get the market. So most of the time it's that. There could be some other dimensions which probably I'm missing, but that's what I've seen. The next question is, with the current market, what if you close 2 huge nationwide partnership that will grow the bottom line by millions, but you want to raise money to support the partnerships? And currently you have some traction, but it's not substantial enough. What should founders' approach should be towards raising the capital?
So
the question is that they are basically looking to, they are targeting to close 2 big partnerships that will help them to grow the bottom line by millions, but they want to raise money to support closing these partnerships because they had traction, but that's not.
Yeah, of course. Unfortunately, it's a chicken and egg situation in which you cannot buy an airplane ticket to see AWS and partner with Amazon, and you don't have the money to fly. So it is very difficult to resolve that equation. That's why I love angels. So go to your personal contacts, go to your family, go to your friends, and bring them in as personal sponsors to finance that side. So baby steps, little by little, of course, depending on who you want to partner, but bring your three Fs. I mean, that's why this group is very important when you're an entrepreneur, especially your family in the first days. If you don't have money, go to your friends. So you can have these sponsors that will do that.
Awesome. Next question is, what KPIs do you think are best for startups to track and report in the current market scenario specifically?
So depending on the industry, but in general, how do the KPI is going around your clients and your product. So if you're a digital tech that will bring in users, lifetime value, customer acquisition cost, churn are the 3 ones that we follow a lot. We like to see KPIs on HR as well. So your employees, your diversity of your employees. We like to see also in terms of product, different KPIs that will see the natural sense or the health of your product. And last but not least, the financial KPIs, very important. Yeah. So your MRRs, your ARRs, your costs, your cash burn, your etc. And if you have some impact KPIs, that's great as well. How is your product and your community being impacted by your product or your team? And just try to keep it short, because it's been proven that in terms of impact investing, it's better to have fewer KPIs, but manage them very well and follow them very well.
Right. I think that's basically the essence. We also recommend our startups on DueDash platform. Don't take like 10 of them, just take 3 or 5, but be consistent and be religious about it, and so that you can show some growth and also be responsible and accountable for your growth, so to speak, rather than just reporting to investors. Awesome. So the last question, are there any tips for startups or even early stage investor, because it's an angel investor, I suppose, who's writing that question, that you can share for theme-driven investments, especially to uncover if they are getting the timing right? Is there a way to figure out where the cash is in the wave coming from?
Yeah, it's very difficult.
I'm hearing a lot about climate tech. You mentioned climate tech or ESG reporting, right? So I think that question kind of came very quickly from.
Yeah, it's difficult. It's a matter of data. So it's tied to another question here that they say, where are the VCs and PE firms that invest in X or Y industry? So the data is over there. I mean, PitchBook, it's $20,000 per year, unfortunately, but PitchBook will give you I think the best data for what you're looking for, because PitchBook tracks, and I say it on a first hand. PitchBook approaches me every month as a VC to let them know where am I investing, how much am I investing, where did I invest. So PitchBook is just amazing. If you don't have the $20,000 for the membership, there are institutions that have it. I bet your government somewhere they have that membership. So PitchBook for me, it's an amazing place to get data, to know where the capital is flowing and the valuations and the comps and all the data that flows into your industry, including impact and including procurement. And it was another question, procurement or any industry.
Yeah, and I would just like to add there, like, while on DueDash, we basically save investors time to basically collaborate with startups, but we'll be starting another service soon. We have venture funds who also raise funds all the time. So we will be collaborating. We've started, and we are collaborating with venture funds to kind of share the fundraising for venture funds, also depending upon, of course, what their minimum ticket is. So extending that ability to accredited investors who are in our platform as well as in our network. So that would also happen. So please feel free to reach out to me. It's parul@duedash.com. If you have any specific interest, reach out to me, reach out to Michael, michael@duedash.com, and we would be happy to support that as well.
And that's why I love your business, Parul, since day one. I saw this opportunity, amazing opportunity, because you go the extra mile. So it is good to have data, and you have that data as well. But you make the difference when you connect both ends, and you will not find that in PitchBook that much. Yeah. And you do that. So that extra mile, I think you're very successful around that. And I really, really think that the model works, because you as an investor in DueDash, you want to find that pipeline, and you want to find data as well. And the entrepreneur wants to find that data and wants to get in touch with that investor. So you resolve the whole equation. And that's why you've been successful about that.
Yeah, absolutely. There are layers and layers of features and functionalities, and we're trying to help investors and founders of different stage and types to basically be able to collaborate, because it's a networked industry. It's not just tiered, and people get connected in different ways. So we're trying to solve for many, many things, but we're trying to figure out the sweet spot where we are with our users, which is predominantly around angel networks and VCs. And also family offices, saying that it's pretty much everything, but we're still trying to figure out the use cases which helps them the most, which is exposing the deal flow and fundraising for funds, because they're also raising funds all the time. So those are the two use cases we are trying to help our users to grow from. So thank you so much, Jose, for sharing your morning with us. And I know I know you have a family commitment, but thanks so much for making this time. It's been fun.
You heard my baby.
I know your morning run routine, so I'm really grateful that you made the time. So really appreciate that.
I love this. Thank you very much. Congratulations, everyone that took time to hear what I'm saying. I hope you can get some out of it, and I hope we can be in touch. And congratulations on what everyone is doing. And I'm here to be resourceful, and anything I can help, please feel free to contact me. Parul, if you can send my email to our network, so I can be useful.
Absolutely. So Jose, Dux Capital is present on DueDash, so startups can definitely reach out to Jose through DueDash. You have a messaging ability. Write a pitch, exciting pitch to him, which is very, very short, and what makes you unique and what makes the business model defensible and not in the red ocean. And if you're in the red ocean, how will you achieve your goals. So just make the right
Great.
pitch, and I'm sure it'll get his attention. Thank you so much.
And bring your bat and your ribbon in order to hit the piñata together.
Yeah, I'm going to be in Austin soon, so let's do that.
All right,
Thank you.
perfect. Thank you very much.
All right. Thank you. Have a great day.
You too, bye.
Bye-bye.